Good afternoon, everybody. Welcome to our Friday show. I hope I didn't screw things up. It's been so long since I've done a show. I don't even know if I have the microphone settings right and all that, but I'm back. I have the ceremonial Hofbrauhaus. This is the half liter, so it's kind of cheating, but no whiskey. Cheers, everybody. Good to be back. Got in last night and still decided to do a show today just to get back and catch up. As you guys know, for the last 2 weeks, I have been traveling through Europe, and I made it a point to not look at in markets too much. I tried not to, just because it'll distract you from your trip. And as the comments here are stating, a weird couple of weeks, right, Glenn? I mean, it was just some crazy volatility and just bizarre stuff, especially with what happened today and yesterday with regards to earnings announcements. So I got myself caught up, and I will cover as much of it as I can today, but I'm going to start things off a little bit different. Normally, I'm not a good picture taker. I'm not a good social media person. If I was a good social media person, I probably would have, 50, 60, 100,000 followers. Instead, I've got under 5,000, and I don't do anything on social media. So I tried to take a couple of pictures, but here is just a little bit of what we encountered, just so I can give you the quick rundown of my trip. So back in the saddle, started things off at Hofbrauhaus, or sorry, not Hofbrauhaus. This is actually Oktoberfest, in case anybody has never been to Oktoberfest. You should go. It is just a great, fun experience. The Germans are just great people that love to drink and sing songs. So this was the first night in Oktoberfest. Then where did I go from there? I went to Prague, which probably one of the most beautiful cities you will ever go to. Just lots of castles and just amazing architecture. If you like to wear high heels, ladies, do not go to Prague. You will blow out your high heels. I wanted to send a memo to the company that made my travel luggage, because every street is cobblestones. As far as you can see, you'll never get away from cobblestones, even if you're driving on the regular streets. And my suitcase made it the entire way. It was pretty damn amazing. All right, so that was Prague. This is a beautiful sunset we caught in Prague on the river. It's just an unbelievable medieval city. This is me in Berlin. Decided to, check my stock quotes with all the locals. They were frozen in time. Maybe that was just pale with, fear as the markets were dropping and they were losing money. But a fun little statue I found there. This is another great one. This is going back to Berlin. It's obviously way before my time, is dealing with Checkpoint Charlie, that gateway between East and West Berlin, or East and West Germany, excuse me. We decided to go there and check that one out. It was kind of cool. You can see the old photo on the left, which is, I believe, was 1967, and this is what it looks like on the right as of last week. So a little change there with regards to what it looks like. And it's funny because there's no tanks behind it anymore. It's just all commercial business, money, 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 money. Where else do I go from there? This is also in Prague, so I guess I skipped them out of order. We had a wonderful day at a rooftop bar overlooking that medieval square, which is absolutely fantastic. Of course, I did a lot of beer drinking on the trip, certainly Oktoberfest and in Prague. And then I went here to, this is the Heineken Brewery tour, the obligatory photo with a giant copper beer ton. Amsterdam, if you have not been to Amsterdam, it is absolutely one of the best cities on the planet. I actually have to say, for me personally, it was the highlight of the trip. I love Amsterdam. I love the canals, of the people. I love unfortunately the weather wasn't the best, but just beautiful stuff like that. And I think that might be my last shot that I took there of Amsterdam, a nice little nighttime shot from Amsterdam. And I think maybe there's one more. Oh yeah, if you haven't been, there's a lot of this type of stuff, these beautiful buildings, but they're all kind of leaning forward, backwards, sideways. They lean all over the place because of the way that Amsterdam was constructed on, basically it's just constructed on water. It's a pretty amazing city. Anyway, I won't bore everybody here with the remainder of the trip and all the pictures, but I thought I'd give you just a little taste of what I was doing for the past couple of weeks. Lots of walking. I thought maybe I'd lose some weight along the way. Exactly the same as where I started out, even walking 20,000 steps a day. All right, that's it. I got my trip out of the way. That's done. No more vacations for the foreseeable future, but what we do have to talk about is, of course, our markets. I had a chart drawn here. I actually went through earlier. Yeah, Amsterdam Mimi is I have one of my favorite places on the planet. It is just absolutely fantastic. So I drew this a couple weeks ago when we were talking about where I was thinking the markets were going to go. And the reactions have been a little, obviously not perfect, but I drew these blue lines because I was expecting there to be a market pop, right? I wanted to see this market rally up a little bit, mainly come into a supply zone and then start selling off. And I just think that there's just so much fear and pessimism in the markets that we might even get to see this blue downtrend line be achieved a little bit quicker. Now, I'll zoom out a little bit. That gives us a target down here on the S&P of around 3250 would be the target that I have in place, which from current levels is about 350 points away, which I definitely think is doable. Now, today was an interesting day. We'll talk about that here as we progress, but just wanted to bring up this chart because I still think this picture is absolutely in play. I think that we may actually see this come to fruition here in the near future. The last couple of days have been very interesting for these equity markets. So let me start at the bottom, work our way up to the top. Crude oil was the biggest loser out there, 3.96% as of right now. Pretty big decline. Now, of course, look at the trend. We've talked about this at length. Sell the rallies, right? Short those rallies into overhead supply. Unfortunately, we didn't get this pullback into a supply zone, right? The one that turned on October 7th, but it was a rally back up. And now let's see what continues on from here. Do we challenge these lows back at 76.20, or do we end up breaking these highs right around 93? I personally think you'll probably see it drift down a little bit more. Let's see. Let me real quickly go to the comments. I heard they were cleaning up bicycles in the rivers just a few days ago. We actually we walked by this one spot, and I was like, oh, God, the smell was just repulsive. And there was a trailer in the middle of the street, and they were actually taking out bicycles that were stuck in the bottom of the canal. And if you haven't been to Amsterdam, it is the bicycle city. It is absolutely, bikes rule the world. Every street, and I mean every single street in that city has a bike path on it. It's awesome. I love it. If you're someone who likes to cycle, Amsterdam is absolutely a place to go. But it's also, I think the statistic is something like the U.S. has like 3 guns per person, right? In the United States. I think in Amsterdam, it's like 3 bicycles per person because every street you go down, every building, every fence has a bicycle sitting there somewhere. I think they are cleaning up those rivers a bit. They have a lot of other issues there in Amsterdam, but yeah, I just love it. Bicycles everywhere. The way we close, I feel like next week it's possible. Well, Chase, I think it's going to take a couple weeks to get that big sell-off, but the way we close certainly does not look good. It was really looking bad the way we finished today. Although, coming on the heels of what happened yesterday, everyone was extremely bullish and got all excited, and then we just gave it all back today. So let me start off. I know we did the crude oil. I'll run through the indexes here in a second, but I want to start by looking at the economic calendar because to me, it's economic calendar and earnings are what really drove today. So if you look at the economic calendar here, not a lot of really critical U.S. data. I mean, you did have retail sales numbers come out. You can see those right here. They were better than expected, which is always great. The core retail sales. But retail sales themselves actually showed a contraction, meaning a contraction from the previous month. Now, you'll see here it says 0.0, which means retail sales did not improve, nor did they decline. So we basically stayed unchanged. However, that was lower than the expectation of what the previous, what the expectations were going to be, which is 0.2%. Import prices, that's not that big of a deal. Other than that, you had consumer sentiment numbers, which really not that big of a deal. Inflation expectations. You see here it says preliminary University of Michigan inflation expectations. They're expecting inflation to jump from 4.7 to 5.1 with their numbers. And I had to look at this and go, hold on a second. Really? I'll go back to some of the data that we looked at when I was mentioning that I feel like inflation is going to start to drop, which was a lot of the commodity prices. So let me run through the commodity charts here real quick just to look at what those charts have looked like over the past few months. So here is, again, I could look at a whole bunch of different stuff, but here's soybeans, right? So soybeans have been pretty much flat. You've got lumber has been continuing its absolutely beautiful downtrend, so prices are getting cheaper and cheaper. Here you have corn. So corn has been on the rise, but it's plateaued for about a month, maybe a month and a half, just kind of sideways action. Cotton. Right, cotton is still in its pretty aggressive downtrend. It never actually closed this gap that we saw all the way back on Wednesday, the 15th of June. I actually thought we were going to start to close that. Well, we didn't. We came right to the origin of the gap and then sold off. So this would tell me that inflation is going to decline a little bit. You have wheat, right, which has been drifting up, but it's not aggressive, and natural gas. All right, natural gas has been on a sell-off for the better part of 3 months. So those basic commodities that are used in goods and services have been on declines. What else I want to show? We have metals, which isn't that big of a deal with regards to inflation per se, but you got copper has been just drifting sideways. Silver's been actually on an extremely ugly sell-off, which sucks because I'm long silver and I will continue to stay long silver. But this has been an aggressive 2-week run to the south side for silver. But I look at these commodity prices, and I got to look at University of Michigan consumer sentiment and think, what data are you looking at that you think inflation is going to be surging up a lot more? We could be looking at things like crude oil, right? Well, let's go look at the crude oil chart, and you'll notice that while we did see a spike up for about 3 weeks, it's still on a big downtrend. So I think that, yeah, I'm glad to be back, John. I think that the overall trend for crude oil will probably maintain this downtrend, which, in my opinion, will probably put a little bit of downside pressure on the inflation numbers and maybe even the cost of a pint of beer that I'm drinking. Oh, it's, beer's just a little bit smoother than whiskey, I must say. All right, so that was the first part, but that's not the exciting thing. We talked about earnings every quarter that they come around, and this week we had the kickoff, right? This really major earnings season kickoff, and it had a lot to do with financials. Big names out there reporting. You had JP Morgan, you had Citicorp, Wells Fargo, Morgan Stanley, US Bancorp, PNC Financial, BlackRock. I mean, these are the motherlode. Next week you've got Bank of America and Goldman Sachs, but pretty much all the big names reported, and you guys tell me, out of the 1, 2, 3, 4, 5, 6, 7, let's just say that there's 8 banks reporting earnings today. How many of them beat earnings? Just type in a chat. Out of 8 companies reporting today and yesterday, so the last 2 days, how many of those banks beat earnings expectations? Now, normally you're going to get a staggering, right? Some make, some miss, some have big beats, some have big misses. That's relatively normal. Well, here is what happened today, and I'll show you those. And you look at JP Morgan, beat earnings. Citigroup, beat earnings. Wells Fargo, beat earnings. Morgan Stanley, beat earnings. UBS, US Bancorp, beat earnings. PNC Financial, beat earnings. Everybody beat earnings, all of them. It wasn't like, hey, one had a good year or good quarter. Everyone beat earnings. Now, I don't know whether that's due to them lowering the expectations so that the bar was just easier to jump over, or if they are, in fact, reaping rewards of higher bond yields. Now, of course, if you guys have been following along in this program, you've been watching that 10-year, and we hit 4%, right? We hit 4%. Hey, Amy, good to see you. We hit 4% on the 10-year. Now, again, that 10-year is the basis for housing, basis for 30-year fixed-rate mortgages. So if that continues to rally, you're going to see a bit more pain in these equity markets. So let me show you that 10-year, since some of you may not have seen it. Here is your 10-year. We're at 4.02 today, but, I mean, come on. I always like to mention that stupid little phrase. It says, the trend is your friend until the bend at the end, and I don't care which line you're using, the red line or the blue line, that trend is aggressively up. And right now, this pattern is actually what's called an ascending triangle, which tells you the pressure is higher that this bond market is going to move to the upside and see these 10-year yields surge even more. I guess the question you have to ask is, well, where are we going to go with regards to that 10-year? And I was somewhat joking, but a majority serious when I said, if we see that 10-year continue to surge and the Fed do what they say, which is unwinding their balance sheet, then you could see 30-year fixed-rate mortgages at like 8% by the end of the year. I know that sounds insane. I did mention it'd be probably next year, but as aggressive as this trend is, if we get a breakout and a pop-up, you could see those 30-year fixed-rate mortgages really surge. And of course, what does that mean? If we see this 10-year spike, let me zoom out here on a weekly to see where it might be headed to. It really doesn't seem like it's that out of the ordinary to be up at the 5-6%. I think right here, about 5.25 will probably be your next big stop for the 10-year. Well, for 4% right now, 5.25 is 1.25%. We already anticipated the Fed raising interest rates even more. We can go out here to our Fed funds futures, which I love to look at, and see what the plan is right now for December to maybe paint a more solid picture of expectations. So here is December. Right now, there is a 66% chance that we're going to see a 1.5% raise by the end of the year. So if we get a 1.5% raise in interest rates by December, then this has no problem, absolutely no problem being at 5.25%. It might even be higher than that, 6 or 7. And of course, that could have a huge impact on the housing market. Now, if you don't think it's had an impact, right, we've talked about this for the past couple months, which has been the impact of the 10-year on housing. And we've already seen offers being dropped, right? Deals falling through because people are like, wait a minute, market's falling, I don't want to pay that. We're also seeing sellers lower their prices for their homes. But take a peek at IYR, right? IYR is a real estate ETF. And while it may not seem like much, look at this is a weekly time frame too, right? You can see that the housing market, they're anticipating pain ahead, and I think large part due to that serious surge in the 10-year. I'll switch us back to a daily time frame so you can see it. It seems like we've had just nothing but red candles for the past 3 months. We have dropped 34% off the peak, and if we just go back here to August, mid-August, to where we closed at today, you're talking a 25% decline in real estate. So the expectations, certainly from an institutional perspective, are more downside movement in the U.S. Housing market. So I thought that was rather interesting when we take a look at, financials are doing great. Well, yeah, market shrugged it off. And I think this is going to be the challenge going forward. Next week, we've got a lot of really big names reporting. You've got Tesla reporting. You've got Bank of America. You've got Goldman Sachs. You've got a huge... You watch Monday Morning Mustangs. I'll put all the earnings announcements in there for next week. But if you look what happened today, it's disturbing for the markets. Why? Because you have these companies beating earnings, which normally in any normal given market would be, yes, buy those shares and they will surge to the upside. Well, some of those were down. Morgan Stanley beat earnings and was down 5%. If they're shrugging off positive earnings right now, that's a bad sign for the markets going forward, because normally you're buying a company because of its earnings. That's why you buy shares, right? It's going to make money. That's what I want to buy. If it's shrugging off good earnings right now, then next week, if we get bad earnings, things could really start to fall apart. So be careful. I think that going back to Chase's comment about that S&P potentially hitting that big sell-off point, I don't think it's going to be all the way down to the low of this blue line here. I don't think you're getting all the way down to there. But certainly we could be breaking yesterday's lows on the S&P and drifting lower on these markets if we start to see some big name companies miss earnings. And really, it's about lowering their forecast. Yeah, I didn't catch that, Chase. What was Elon Musk talking about? He's helping him. You got to buy his perfume so we can help buy Twitter. I didn't quite figure all that was going on, but. So we are potentially looking at the market ignoring positive earnings and slamming bad earnings. That is not good. Totally agree, Chris. That's what had me going, oh crap. I was kind of expecting a little bit of a bounce there. As you can see by this chart, I thought we'd rally up a little bit more, but we really had a 2-day rally and then just gave it all back. So this is not good. I think that there's still so much pessimism and negativity. Remember, the vast majority of people, many of you watching this right now, are sitting on paper profits, right? You've got all these massive gains in your portfolio and your 401k, and you're like, yeah, I got so much money. I'll be blunt, because I'm back from vacation, I'm having a beer. At this point, you don't have shit. What you have is paper profits. Until you close those trades, it's all paper profits. So I think what you're seeing now is a lot of people going, you know what? I'm just going to lock in some profit here because of the uncertainty, and that selling might start to trigger more selling. Because they shrugged off positive earnings on financials, that to me paints a very bad picture for our market going forward. It makes me rather nervous. All right, let's, what time we got? All right, well, let's go back to our markets here and we'll run up from the bottom. So we did crude oil. Here's the NASDAQ, which I was kind of expecting to have a little bit of a follow-through rally today. No, complete meltdown. You were down over 3% today for the NASDAQ 100 futures. 10,746 is where we closed. That's a 337-point slide. That is not good, but look at the trend, right? Go short those rallies. Russell 2000 was on the heels of it, but Russell is actually looking a lot better. You notice that 1640 line I have drawn in blue at the bottom. Well, that was the low that we saw back on June 16th of this year, and we have not been able to break it. So that's a good sign that the Russell, which represents small cap companies, has not been able to break that. That's obviously a positive sign, but every other index, right? There's the NASDAQ has broken below those lows from June 16th. Here's your S&P is down below those lows. And here's your Dow, which is also below those lows. So really, the Russell is going counter trend. It's trying to hold it up. Not exactly sure why that is. It seems odd to me, but that is what the charts are telling us. So here's your S&P. Again, we've looked at that. I do think you'll see more follow through next week to the downside here, especially if they've shrugged off good earnings this week. If we get any bad earnings next week, you could see some big sell-offs there. Gold also continuing its downtrend, right? We were getting optimistic. We saw that rally back up about a week and a half ago, and I thought, okay, here we go, great. But it came right up into this area of supply. Hit supply on the 4th of October. Unfortunately, I was in Italy, or no, I was in, where was I on the 4th? I was in Munich drinking a bunch of beer, and had I known, I may have actually closed out my gold position, because if you're going to expect this trend to continue, right here at 1740 is where you would expect it to stall. Now, I had sold some calls against my GLD position as well, so I'll collect a lot of nice premium, but giving back some of that gain on my gold today. Now, last but not least is crypto, but let's be honest, Bitcoin, for all intents and purposes right now, is dead. Right? It's just sideways. It's doing nothing. It actually looks like it's a descending triangle. For those of you who are pattern people, I will draw that descending triangle for you. It looks roughly something like this. And that is not a good sign. I still believe that Bitcoin is going to go lower. I still believe that the crypto space is going to go lower. Main reason being, again, paper profits. I think people are going to start pulling money out of risk assets to cover their expenses, pay their bills, and we still are facing, at least for my expectations, significant unemployment hikes going forward. I think you're going to see the unemployment numbers start to surge and move up, just as Jerome Powell has stated. And if you're looking forward, I think that adds an air of protection. Protect yourself from those uncertain events. Any comments on the financial mess in England? No, I haven't dug too deep into it. I know that they're scrambling, trying to prevent themselves from getting into a much worse mess, but I don't have a clear comment on that one. So maybe small caps aren't as affected by rising rates. Well, it's weird, because normally when you have a rates increasing like that, there's this move away from small caps. Remember, when you have a very bullish market environment, when rates are being lowered, that means the cost of capital is cheaper, right? So if let's say I'm Facebook, and the rates are all of a sudden stuck at zero, I can go out and borrow money, and I can go buy some of these small companies and help bolster my position as Facebook. So I could go buy some social media companies that are, startups. There might be some new technology I like. So I could use cheap money, buy those companies, and then thus increase my rate of return by, killing competition or getting into new technology. When you have a rising rate environment and the cost of capital is higher, it moves companies like Facebook, Amazon, Twitter, Google, Microsoft away from doing M&A activity. You don't see merger and acquisition. So generally, in a rising rate environment, small caps pay the price first. Because part of the allure of a small cap company, they might have a good product, they might have something innovative, but generally what will happen, if somebody has a really good product, a bigger company will come and buy them, and that's where the big pops happen in small caps. So it's a head scratcher right now as to why the Russell is actually showing strength when the broader indexes, the S&P, the NASDAQ, and the Dow, are all showing much more weakness. So to me, that was kind of an interesting one. I seen a Bitcoin ATM there setting out. I would highly recommend you don't use Bitcoin ATMs. Usually the fees are ridiculous. So remember, there's 3 ways that people get you with fees in the world. Number 1, they're going to say, here's the transaction fee, X amount of dollars or euros or yen. That's number 1, is they'll state the transaction fee. Number 2 is they widen the spread. So there's a price you can buy it at, and there's a price you can sell it at, and the difference there is the spread, and they'll widen that. The third one will be a floating fee. So what you get on these Bitcoin ATMs is typically they widen the spread, so you have no idea, and then they charge like an 8% fee on top of whatever transaction amount you make. So they sound great. Back in 2017, when I was building the cryptocurrency course for Online Trading Academy, I actually used several different Bitcoin ATMs, and it was great back then because I could put in a $100 bill and automatically get out a paper wallet with $100 worth of Bitcoin. But now if you use a Bitcoin ATM, you have to show your driver's license. You have to give them all sorts of personal information. So now they're tracking every single thing that you do. It really doesn't make much sense to use a Bitcoin ATM. It's just not worth it. Let's see. What else do I got here? With that, I think the markets and the Fed have an agenda. Markets want lower. Might Fed fight inflation with pain. Well, again, I've mentioned, how many times have I mentioned on this show that the Feds back themselves into a corner, right? Only 11 likes? It's all right. We gotta get you all back into the fray. I know we're missing a lot of our regulars here because, well, been on vacation, and typically when I take time off from the show, I'll lose quite a few regulars. So hopefully we'll get the regulars back here, maybe get some new followers out there. So, the Feds back themselves in a corner. You're damned if you do, damned if you don't. With the markets having as much pain as they have right now, the only thing I think the Fed can do is kill inflation. You've got to kill inflation. If you don't, the markets are really going to go to hell in a handbasket. So they're going to have to keep raising rates. And as you saw here on the Fed funds futures, the expectations have been getting more and more aggressive. Down here, if you go a week ago, there really was almost a 23% chance of a full 1.5 point increase by December. If you go back a month, it was only 9%. So slow but surely the markets are pricing in much higher rates at this point. Now, I'm not sold on this. I don't believe that necessarily we're going to see that aggressive of rate increases. If inflation numbers do drop and commodity prices continue to decline, then I think you'll see this backpedal. But we've got, a month or so, actually under a month, we got 2 or 3 weeks until we get the next rate increase. And that's expected right now, the 99.4% chance that you're going to see a 75 basis point increase at that November meeting. Now remember, when you look at this a few weeks ago, they were saying 50 basis points. It's 50. Now it's a foregone conclusion we're going to see 75. So, this is always fluid and dynamic. You can see right here. Where was it? Yeah, a month ago, there's a 50% chance we would see a 75 basis point increase. Now it's 99. I gotta love it. They're pricing that in. Let's see. Christy says, could it be because this is the bond market crash, including the corporate bonds and small companies have no bonds? That might play a part of it because it's going to be harder for companies to raise capital, period. Any company right now that's looking to raise capital is going to have to offer a higher rate of return just to be competitive. So, you look at a couple years ago, you might have bought some corporate bonds and gotten a 5% yield. Well, now you might be looking at an 8 or 9% yield. Those companies are going to be forced to pay more to raise that capital. And of course, that cuts into the bottom line. That's earnings. You start to take away from that. Yeah, I did see the actor that played Hagrid died. So that one too. Linda, what'd you say? I'm not regular, but when I... Well, good to see you, Linda. Always a pleasure having you on the program today. What else do we have here? Well, if you have questions directly at me, do it with question marks like Naum did. Do you see merger and acquisitions in marijuana industries? So obviously with what Joe Biden did, I think it was last week, on pardoning those who are in prison for federal marijuana charges, I think that the bigger picture there says that cannabis is going to be legal federally. Unless for some reason something happens and Joe Biden's out of office here incredibly soon, it seems like the Democratic agenda is to legalize medicinal or legalize federally cannabis. Now, I think I'm probably going to polarize myself here and have many of you think that this is wrong, but personally, I think it should have been legal years ago. I think we were putting people in prison that just don't need to be there for selling a plant. Look at in Amsterdam and other cities around the world. I was in the Czech Republic. I was in Amsterdam and Holland. It's legal. It's not a big deal, right? Would you rather have somebody who has smoked a couple of joints driving down the road and is probably doing 5 miles an hour on the freeway, or somebody who's drunk, like that woman in Los Angeles who was doing 130 downtown in a 30 mile an hour speed limit? I'd rather have somebody going so slow that never mind. Get me off my soapbox. But I think that this paints a picture for federal legalization. And what that means is, the long-term perspective for something like MJ is probably fairly good. But, look what happened here. When he made the announcement, you had this huge spike up in MJ, which is one of the major ETFs dealing with the cannabis sector. It gave it all back. I mean, it's given it all back. And I think if you were a long-term holder, and I think Mike LaRusso, who's one of our regulars here, I think that you're probably okay holding long term. It's just, and we mentioned this a while back, look at the trend. I mean, this is a horrible downtrend, and until it stops, you're putting yourself a lot of risk by buying it. And I know what many will say is they will say, well, Merlin, it's trading at $4.69. It can't go much lower. Yeah, it can. They'll do a reverse split, guys. They will do a reverse split. They'll do like a 10-to-1 reverse split, and then it'll be $50 per share, but you only have 1/10 of the shares that you owned before. Let me see if this has done any splits before. I think it has. Oh, no, it hasn't done any splits in the past. But, being under $5 is not a good thing for any listed securities. If it stays down there too long, they'll end up engineering a reverse split to get it back above $5 so it doesn't get delisted. But, if you're long-term positive, as I am on cannabis, it may be not that bad of a long-term hold, because I think in the next 2 years, we will probably see this legalized federally. I think that was a big step by the current administration to make it very clear, look, let's legalize this federally and get a lot of these people that really didn't do any harm out of prison. Anyway, Now some of you hate me because you think I'm all pro cannabis. Yeah, I mean, look, it was funny when we got to Munich, right? Munich, if you've ever been there, Oktoberfest is amazing. It's basically a giant county fair revolving around beer. Now, if you go here to the OC fair, for example, and you have too many beers, you're arrested and you're going to jail. Period. Drunk in public, there's no tolerance. We were walking down the street coming back from Oktoberfest, and there was a guy, I kid you not, the sidewalk was 8 feet wide. He bounced into the wall on the left, and he's in his full lederhosen, German guy, and he bounced all the way back to the sidewalk, and he's teetering on the sidewalk about to fall into the street. We could not believe this guy was actually walking. He'll get no citation. Everything will be fine. I think alcohol is just a way more dangerous drug for people than cannabis. But anyway, plus there is some medicinal benefits for cannabis. I don't know too much medicinal benefit for alcoholics. Yeah. I don't know, when you watch Intervention, the TV show, there's a lot of alcoholics and hard drugs. You don't see anybody who's like, marijuana just ruined my life, man. I was just too mellow and ate Doritos all day long. I don't know what happened. Anyway. Oh, good to be back. All right, what time we got? 31? All right, I'm going to start wrapping up just so I can get the show on the road. If Kroger buys Albertsons, would normally the stock go up or down for Kroger? So generally what happens if whoever is buying the other company, they usually go down. So in this case, if you're saying Kroger's going to buy Albertsons stock should shoot up and Kroger should drop because it's going to dilute their holdings a little bit. That's generally what happens. Nothing's ever concrete, but Glenn, in that case, if Kroger bought Albertsons, Kroger would most likely drop. What's the ticker symbol for Albertsons, Glenn? I don't know one off the top of my head, but I know Kroger. So there's Kroger. Did they make that announcement today? I did not see it. I haven't been paying too much attention. So if you look there, you got the big drop down today. Did they make that announcement today? And then I'm assuming Albertsons. Let's see if I can find it. Stocks, Albertsons companies, ACI, huh? Generally, you see them spike like it did, gave back a little bit today, and KR sell off. But that's very typical when there's earnings announcements, acquisitions like that. Let's do it so the industry can do business with the banks. That would be great. I mean, that would be such a huge pop for the industry. Period. If you had legalization federally, then banks could now do business with cannabis companies. Right now, cannabis companies are predominantly a cash business. It's at risk for them, right? It's a dangerous place to be. So I think it would be a win-win. You're already paying the taxes on it. Let's just call it a day and move on to something that's more important. All right, let's look at what's going to happen on Monday. So Monday is kind of a continuation of this earnings week. You've got Bank of America, Charles Schwab, and Bank of New York Mellon. So it's pretty much all big financials. Judging by what happened this week, it would not surprise me to see Bank of America and Charles Schwab also beat earnings, since every bank, including yesterday's earnings, beat earnings. The big news comes later in the week, but I do have some economic announcements. You can see right here, you've got the federal budget balance for the U.S., Empire State Manufacturing Index, which is expected to get worse. Now, for those who may not know, Empire State Manufacturing Index it's put out by the New York Fed. And the Fed basically issues a survey to a bunch of New York businesses in the manufacturing sector and said, hey, what do you think about current economic conditions? How's your business doing? Where do you think it's headed? What's your optimism? What are you buying? What do you say? To get a gauge of what's going on, and that's expected to get a little bit worse in Empire State, and it's also coming out, I believe on Thursday will be the Philly Fed manufacturing. So you got two pretty big manufacturing pieces of data coming out next week, and that's pretty much it. Down here at the bottom, you've got one of the most honest and trustworthy governments in the world reporting their GDP numbers. That's China. Sarcastic here on a Friday afternoon. It's what happens when you have a pint of Hofbrauhaus beer. But they're expecting their GDP to jump from 0.4% to 3.4%. I usually never quote anything from China because I just don't trust the economic data. But hey, it made it onto the screen today. So congratulations, China. You actually made it on the economic calendar on the TraderMerlin show. Other than that, you notice here, not a lot of big stuff. The Euro does have the German Bubba monthly report, which of course will give a good reading on what's going on over in the German economy. But unless you're trading the Euro, probably not going to be that big of a deal. Here's your European markets. From a currency perspective, the euro was certainly wild while I was over there. At nowhere, it's just interesting to say, but nowhere that I went did I get a 1-to-1 conversion. The conversion was bad everywhere that we went. Munich was absolutely atrocious. They charged 14% commissions on ATM machines in Munich because of Oktoberfest. It was absolutely crazy. I'm with you, Margaret. Oh, I do love me some good Chinese food. We have the euro. Here's the British pound, which has been recovering a little bit. Good news for anybody who's holding the pounds. I know if Kevin's here, but one of our regulars that listens to the show. Luckily, it's found its footing. I was really kind of hoping it would make it all the way down to parity just so I could say we were a part of history, although its current move that happened on the 26th of September, right before I left for Europe, that is part of history as well. Never been that low, ever, for the British pound. We got that yen, USD JPY. I mean, look, we've been saying go long on USD JPY because the dollar's going to keep getting stronger, and at some point, Japan's going to have to do something here. This is not really good. Not good for their market overall. Now, we had the 150 mapped out here. You guys can see that chart. Let me go back to the weekly here so we can see where that level was. But the 150 is where, Scott called that level on, was it January? January 5th of 2022, Scott McCormick called out that 150 mark. And I'm going to get him on the program next week. No, I'll try to get him on the program soon because I don't see anything to stop this. I mean, hell, we had the same conversation with David Warner. We had it with others in the forex market space, and really no reason for this thing to slow down. There's nothing that could cause it other than a central bank action by Japan, and they're stuck at negative 0.1. So that carry trade is getting more and more expensive for them. The trend's going to continue. Now, this week has been a big move, right? You've seen some pretty big moves up here in this trading week. We'll see if that might have a little bit of a pullback, but hey, buy the pullback, USD JPY going higher. Let's see, is that it? That's all I got? Yeah, that's all I had. So it was a short show today, a little bit shorter than normal. I apologize because I didn't get a chance to go back and look at all the emails. I saw a bunch of you sent emails while I was gone. I will do my best to catch up with those, and on Monday's show, I will put them back in the presentations, and we'll hopefully answer those listener questions. Now, for those of you who might be new to the program, it's easy to get your questions answered. You just put them down below any YouTube video. That's the easy one. I actually answered your question on the gilts. I think on the 26th show I did, Chase. I think you emailed me one on the gilts, and I answered that one on the program, but I'm trying to remember how that whole topic went, but I remember I did answer that question on that show that one day. For anybody who wants the questions answered, you can email me at TraderMerlin@gmail.com. That's an easy way to do it, or just put your comments down below the YouTube video for any video. I check them all. It comes through a little control panel for me, and I think that helps me overall with search engine optimization. So if you guys have questions you want answered, do me a favor, put them down below the YouTube video. That said, hope you guys have a fantastic remainder of your week. It's Friday. Go do something good. I'm glad to be back home, and I will see you all on Monday. Take care, everyone.